Welcome to the end of day review for Wednesday, the 10th of January 2024. As usual, jumping straight into the economic calendar, we had one high-risk news event. That was Bank of England Governor Bailey speaking. From what I can see, there wasn't much of a reaction on the price action, so perhaps he didn't say anything that wasn't expected. But nonetheless, we never know what they're going to say, so it's best to avoid trading during this time. Other than that, there were no other news-related considerations for our trading. Then moving on to the daily. Perhaps actually I'll use my live charts to just go through this quickly. So from a daily perspective, yesterday we had our bearish candle closure as expected, which essentially neutralized our daily bias until we get a couple more consecutive candles. As it stands, it looks like the day is potentially going to close bullish. However, from a 4H market structure, our bias is to trade to the long side given the confirmed bullish market structure. However, we don't have anything to the left to support a 4H pro trend primary leg. This then essentially means that we have this 4H last point of supply to trade counter trend because of its validation of the 4H pullback phase right here, and we can consider shorts provided that there is IRL on the mid time frame that we are trying to trade from. Then on the 5 minute, because the 15 minute didn't actually have any place to validate the secondary leg, and the fact that the 15 minute didn't have available IRL in this leg, we essentially used the 5 minute to validate a secondary leg. If the 5 minute didn't have any options for validating the secondary leg, then we simply avoid trading that completely. What has happened since is we created the secondary leg, then we pushed back into the secondary leg extreme quite significantly. From that point onwards, we essentially created another leg which invalidated trading for yesterday, which was Tuesday, and then again today. It appears that we are stuck within this range right here, and given that fact, our options for trading was to either wait for the 4H secondary leg to be reset by PA wicking this level, or to be extended by PA actually body breaking this level on the 5 minute. As you can see, none of that has really followed through. We essentially just well, like I said, staying in this range, and ranges are quite difficult to manage and often don't yield good results, so the best course of action is rather to just wait for PA to further develop. Additionally, if we look at this from a 15-minute perspective, what we can see is it's quite a large range that we're staying in. And I mean, if I recall, last year January was a bit of a rangy month, and it appears that it's going to be much of the same for this January. However, we do have some high impact news events that could potentially push us out of this range, which would be good for our trading, and then we can somewhat resume normal operations. In terms of going into tomorrow, the same rough expectations is to trade short is at play, and we're still waiting for one side of this range to be liquidated to then determine how we want to move forward. Until this range is broken, there isn't going to be much activity for my trading, and that's perfectly okay. I think while you can consider the downside to be low trade activity, the upside is certainly protection of your capital and good risk management. So, you know, in essence, it's a neutral sort of observation, and it's just something that you have to accept with your trading. Overall, that's the end of my end of day review for today, and we'll chat again for the London outlook tomorrow.